Let me show you around. Hey, Mountain View. Yeah, I just want to check in with you guys. I was looking up a couple of things, some documents and whatnot, and yeah, it looks like copper is having some tough times right now on the chart, and it looks like the bears are in full control of this market. So I'm just kind of do some due diligence. Usually I do it on a Sunday, but we do have a Labor Day on Monday tomorrow, so the market's closed, so I can go ahead and do a little bit more. I don't know if you guys can hear me, but so I think right now we've drifted off from that 200-day moving average, which is the simple moving average, which we use for technical analysis. We're starting to essentially go down below these levels for 90 consecutive days. I was able to search in the history logs, looking at all the 90 consecutive days that has ever happened in the market, and we just hit a signal. And usually what that means is we're going to be bearish in 2 weeks. We're going to be bearish on the month and bullish a little bit in the 2 months, okay? So right in time with that next earnings report, right? But check this out. We are going to be bearish in the 6-month time frame, but bullish in the 1-year time frame, okay? So it's it's going to be a rough patch, especially as we wait for the Federal Reserve. Again, I think they're going to rate hike 3 more times, because on average they do about 7 from the last, monetary tightening, the quantitative tightening that they're doing. I think in September, which is this month, right, we're going to have to update the economic calendar on our Discord here. But we're going to go in and essentially pretty much agree upon that there's going to be a 75 basis point hike in September. Whoever tells you one, that's no, right? It's gonna flood the markets through a recession. So 75 basis points, and then we're gonna go ahead and see after that. I think it's gonna be 50 and a 50. I was hoping maybe for 25. Like I was hoping for September to be 50 and 25, but I think it's gonna be 75, 50, 50, or maybe 75, 50, 25. We'll see. But and again, it may seem like 75 and 50 is not much, but it's completely extremely important, especially when you look at the federal funds rate and you subtract it from the 10-year federal note. So normally, and let me just give you guys some little, I'm going to keep repeating this because it's very important. Normally when you take the 10-year, a bond, it's supposed to pay more than a 2-year bond, right? But check this out. What's happening now is as the 2-year gets more expensive, like it gets higher, the 10-year will essentially be pointless, which basically means if you take the 10-year minus a 2, you get 0, which is not good. It's called an inverted yield curve. Now, the most predictive one is the federal funds rate, and that's increasing. And every time it goes up, that 10-year minus that federal funds rate, it shrinks, which is going to indicate a more severe recession or a recession. I'm hoping for a mild recession, considering we've printed so much. I'm hoping for something mild. That's what Wall Street's hoping for. So I expect the stock market to get back into business in the next 24 to 30 months. That's my time horizon. Now, for all the new people that got into the market, I'm so sorry. This is, what I mean? We had fun with free money riding in 2020, 2021, but now it's going to get back. I think the type of market we're going to see in the next 2 years is going to be, I would say, anywhere between 2011 to 2013. To all the people that are in the Mastering Stock Market course, I think those years. They were pretty boring, right? But this is a great time to accumulate, because I can tell you right now, for the people that are watching, back in the day when you were invested in 2020 and you saw stocks start skyrocketing, weren't you wishing that you got in 2011, 2012, and 2013? Well, the people that are going to be in 2027, 2028, they're going to be watching the stock market, they're going to wish that they were cognizant of the market during what we're experiencing right now. So I hope that makes sense. This is how, so I'm looking through the data, which I can pull it up on the screen here. But tonight I'm going to make another video. I'm going to go to the AMC. I'm going to watch whatever they have. I think Maverick, hopefully they have it there. I haven't seen it yet. And I'm going to show Mr. Lou there what a real AMC looks like in a good area, right? Versus, the AMC he was talking about in the armpit of New York, right? So sad. Clover from. Yeah, I know why you sad. No, this is great. It's great. It's great to step in the market during this time, getting the really opportunity. But yeah, so check this out. Just chilling right now, about to get some mojitos. Enjoy, because I'm about to go to war in the next couple of days. Getting back into it. Oh yeah, I appreciate that. No, thank you. If you can, yeah, definitely smash that like button. I highly appreciate that. But yeah, if you guys are around Biltmore, Scottsdale, and want to be at the rooftop, I'm here for the next couple of hours, and then, yeah, by early next year, late, yeah. I think Clover is slowly going to start going up. I think by the end of the year, we are going to be seeing anywhere between 3 to 5. I'm still bullish on that because they're only going to get stronger. And once we hit free cash flow positivity, you're going to see Clover go up like no other, okay? Now for AMC is a bit different story. As interest rates go up, what's going to end up happening is the federal funds rate is going to continue rising, which means that banks don't want risk. So that's another thing, right? But yeah, so that's all I have for you guys. Yeah, this early morning was unfortunate with the BBBY CFO jumping off the 18th floor. It's very sad. Someone commented, you're terrible. Why would you talk about this while the story is still new? I'm like, well, I'm a stock market channel. There are people invested in BBBY that they're probably new to the market, and they don't understand that when a CFO gets fired or a CFO leaves, the stock goes down. Imagine that the CFO dies. What's going to happen? You know what I mean? So yeah, let's see. I have 1,500 in AMC shares. Average price $12.45. Been holding for, and I know, and I'm sure it's been frustrating watching it go down as your percent up has been. So I totally can imagine how frustrated you may be. They're gonna try throwing things at you left and right and trying to get you to sell. The thing is, they haven't covered yet. Once they do cover, then obviously my tone of my voice is going to change on AMC. But since they haven't covered yet, it is still a short squeeze play. It's just they're hindering it, right? No, good. I'm happy you're not frustrated. It's just my fear is the economy is getting really harder, and I know that a lot of holders of AMC, it's getting tough. You know what I mean? So like it's getting hard, dude, and make me more hungry. Hell, I mean, I'm the same way. So I'm glad that we attract people that have that Mamba mentality. Right, so bring that Mamba mentality to the stock market. I like to bring it to anything I put in. So, yeah. But yeah, no, I love you guys a lot. I'm always reading, trying to catch up on what's going on. I have been MIA on the research perspective because of the medical side. But there's a lot going on right now in Wall Street, and Wall Street's trying to figure out what's going on. But it's very true. These mother effers have been covering. This is not a bear market. They are covering. Okay. All right. And yeah, so I love you guys a lot, and hopefully, once we, I'm gonna get back to that, looking at some top stocks, and I'm gonna break it down, and then we'll do some price targets on some stocks that I'm looking at. I know Google is something I'm highly interested in. It's a company that I think is going to stay on for a long time. I think if Google wants to get into cybersecurity, they could eat up Palantir, but they're working with them from what I understand. So it's looking pretty good. I think Google and Clover have a deep-rooted underground connection through Andrew Toy. I do believe the future is bright with software, and all that we need to do now is just essentially wait for the seed to grow, right? When you're thinking of investing, you think of it as basically, you see this, we're in the Arizona desert here, so probably not a good example, but as you can see here, when you plant a seed, it takes time. The problem is the past 2 years, the Federal Reserve easing, they've been putting steroids in the fertilizer, causing everything to grow. But that's not sustainable, right? I give it some time, and little by little, we're gonna get to a point where the seed is gonna hatch. It's gonna sprout. It's not hatch. it's going to sprout, and you're going to start seeing your investments return, okay? And you're going to start compounding, and the free cash flow compounds, and you make money as the company makes money, okay? All we need for Clover is to become free cash flow positive. That is the biggest thing. That's the only question retail should be asking right now on earnings report. When are you going to be free cash flow positive? Okay? The next question for AMC will be the same thing. When are you expected to do free cash flow positivity and becoming net income? And when do you expect to pay off your debts? Because once they do that, then they can start focusing that money on either expanding, buying out other theater chains, or buying back the shares that they printed, okay, and diluted shareholders. Let's resuck that back up, which will put more money in your pocket, all right? Anyway, so far, CARP is going down. 200-day MA is going down. We're going down, okay? And this is the best time, in my humble opinion, to buy. This is when I'm active in the market. I wasn't so much active as it was going up. I slowly put in, Usually before earnings, I like to, you know what I mean? And I have 2 accounts, and I like to write up, you know. But this is exactly where you want to get in. If Clover goes down in these lows, then we're looking for another 30-40% gain by just another jump like that, okay? So 37 of all US dollar ever printed were printed in 2020. Let that sink in. Well, yeah, and I think it was more, wasn't it? Wasn't it more? It was so much. Yeah, I heard it. Maybe I'm mistaken, but it was more. Like literally, all the dollar bills that we have, majority of it was literally printed in the past couple of years. So of course we're going to have a lot of inflation. I don't even understand. Like I feel like the government knew this, and I feel like they're doing this on purpose. Like it doesn't make sense. How could they be so stupid and blind? I don't know. I realize there's always different incentives our government has that they never tell us. All right, and it's usually for military reasons, probably. Okay, but that's my speculation. All right, guys. I love you a lot. Peace out. I'm gonna go drink some mojito. Woo! Peace. Oh, one last thing. The Labor Day sale does end on early morning Tuesday. So take advantage of this. We are going to be increasing our prices. I saw a lot of you take advantage of this, and you guys are going to have a transformation like no other, okay? So welcome to the family, and let's get ready to learn, okay? Peace.